This is the Daily Market Comment by Harlan Buspiceros. I'm Maria Pachurdes. Thanks for joining us at XM.com. The dollar traded lower against all the other major currencies on Monday, although it rebounded somewhat today. What prompted traders to liquidate their long dollar positions may have been the larger than expected slide in durable goods orders for January. The headline month-on-month rate tumbled to minus 4.5% from 5.1%, with the excluding defense rate falling to minus 5.1%. Nonetheless, durable goods orders excluding both defense and aircrafts rebounded 0.8% from minus 0.3%, which means that the slide in the headline print was mainly due to plunging aircraft orders. That's maybe why investors barely touched their bets with regards to the Fed's future course of action. They are currently expecting U.S. interest rates to peak at around 5.4% in July, while they expect them to end the year at 5.3%, higher than the Fed's own median projection of 5.1% for the year. With all that in mind, it is hard to envision larger declines in the dollar for now. However, it is also premature to call for a long-lasting recovery, as ahead of the March FOMC gathering, market participants will have to digest the employment and CPI numbers for February. This week, dollar traders will have the opportunity to get a first glimpse as to how the U.S. economy performed during the second month of 2023, as the ISM manufacturing and non-manufacturing PMIs are due to be released on Wednesday and Friday, respectively. The British pound was the main gainer after UK Prime Minister Rishi Sunak reached common ground with the EU on post-Brexit trade rules for Northern Ireland, saying that the two sides struck a deal that removes any sense of a border between Britain and its province. The accord takes off the table a scary tail risk for the pound and other UK assets, that of an EU-UK trade dispute, and that's maybe why the pound enjoyed gains against every other major currency. The good news comes on top of last week's upside surprise in the UK PMIs, which added to hopes that the UK may be on course to bypass a long recession. Nevertheless, it is still too early to argue for long-lasting gains in the pound. The slide in the dollar helped Wall Street recover somewhat yesterday, with the Nasdaq gaining the most ground. Perhaps the slide in durable goods orders made some investors believe that the Fed will not proceed that aggressively after all. It could also be that the risk appetite triggered by the EU-UK accord during European trading rolled over into the US session as well. This was today's Daily Market Comment. Thanks for joining us at XM.com.